Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to all of you out there who have subscribed to the channel. I really do appreciate it. For those of you who may be stopping by for the first time, well, it's not rocket science. On this channel, I like to keep it as simple as possible, so it really boils down to consistently investing, buying dividend growth stocks in growing companies with positive cash flow that covers the dividend, right? So you want to make sure, in my opinion, I go for 75% or lower, unless it's a REIT or a limited partnership or something along those lines where they pay out a higher dividend rate, returning capital to their investors, right? So 75% or less of their free cash flow going towards a dividend is what I look at. So you're really looking for positive cash flow, like I said, that covers the dividends with a high return on their invested capital. So I like to look at their margins, see how their margins are looking overall. I do invest in the portfolio on a bi-weekly basis. That's what this video is. It's a portfolio update where I will show you any dividends that have paid out in the portfolio for the previous week and the stocks I have bought the previous week as well. Mostly I add to the positions within the portfolio, but if I add new positions, you'll see that as well. I do cover all my investments into this portfolio on a weekly basis. Like I said, that's what this update is about. So go ahead and hit that subscribe button down below if you're interested in content like this, and join me on this journey to financial freedom. Hopefully you are on your own journey as well. And if you have not started your journey to financial freedom, I do have a Webull link down below as well. If you want to open a brokerage account through Webull and use that link, you'll get some free stocks. I'll get some free stocks. Obviously, you don't have to use that, but it is a way to help out the channel. Another way to help out that channel is if you hit that thumbs up button. You hit the notification bell down below. Most importantly, subscribe to the channel. Like I said, join me on this journey to financial freedom. And let's get into the portfolio update for this week. This will be coming to you February 12th, Sunday morning. I always put these out on Sunday mornings. I also have some videos I put out Monday through Thursday, which is my stock pick of the day series that I do, where I pick out a stock. Typically, it's a stock that's pulled back on the day, and we're trying to find value in the market. So we take a little bit of a high-level overview of the stock, where it's at currently. So again, if you're interested in that kind of content, go ahead and hit that subscribe button down below and hit that notification bell so you're notified whenever we post any new content. Like I said, let's jump right in the video. We did add $1,344 in new capital this week. Now, this is where I would typically show you any dividends paid out for the week, any companies within the portfolio that pay out dividends. I always cover that. We did not have any this week, so that's a big goose egg. No positions within the portfolio added to that snowball this week. But like I said, we did add $1,344.35 in change there in new capital, and with those funds, we added 12 more shares to our Medical Properties Trust position, ticker MPW. This is a REIT out of the real estate sector. We picked up those shares right at $12 even. I'm hoping that this continues to fall down. It's come down a little bit from $13, $14 where it ran up. I started buying this in the $10 range. I'd love it to get back down there, but anything under $12 here, I am going to continue to add. I'd love it back in, like I said, the $11, $10 range, but I feel this is still pretty good value. Plus, my overall cost basis is still under $11, so I don't mind adding it. I'll probably cap it at $11 or so right there, but I'd love it back in that $10 range. Excuse me, where I started. We also added 2 shares of Owens Corning. I don't know why they broke them up into 2 different buys here, but 2 shares overall, ticker OC. This is out of the industrial sector. We picked up those shares at $98.09. This is one I'd really like to build out, and they recently did raise their dividend from 35 cents to 52 cents. So that was nice to see. We added 10 more shares of Verizon Communications, ticker VZ, and we picked up those shares at $39.81. I think I've mentioned it before. I like Verizon. Anything under 40, that's where I've been adding it, even though my position, my cost basis is about $45. We'll see that later in the video as well. I have made some adjustments to the end of this video, so you'll see that, see those adjustments here in a moment. So I'm adding to Verizon anything under $40 here, but I will probably cap that about 220-ish shares right in there, and then I'll look to add to some other positions there and just collect the dividends on this one. We added 2 more shares to our Whirlpool position. This is another one that just recently dropped back below our cost basis. You will see that here in a minute as well. I like this under 142, so it dropped under 142, so we added a couple more shares. That's ticker WHR, out of the consumer discretionary sector, and Verizon is out of the communications sector, if I didn't mention that. And Johnson & Johnson continues its pullback. My cost basis here is about 165, so I like it whenever it drops below that. So at 161.92, I added 2 more shares to J&J. That's their ticker, which is out of the healthcare sector. All told, these new positions added $67.13 in new passive income, right, over the next year. That would be the passive income for these positions. Again, $1,344.35 totally invested, and 67.13. Typically, I would add the stocks that paid out dividends from the previous slide, but again, they didn't add any this week. So just the $67.13 from the new positions added. So that was the activity on February 10th. All of our purchases were made on Friday at the end of the week. And as I stated, I have made some changes here. You'll see in the next slide, I'm actually including snippets from my spreadsheet where I track all of the positions in the portfolio, how many shares I have, my cost basis, all that. We'll run through that real quick. I want to try to get as much information and be as transparent as possible with you guys, what I am doing in my portfolio, what I hold in my portfolio, what I'm buying, when I add to positions, if I'm up, if I'm down. What my dividend yield is. So I know that typically I show you on this slide my sector weights, right? My allocation weights, as well as the total of my portfolio and the dividend yield. But you'll see that on the next slide, and I'll explain that here in a moment. But I did add or leave in the sector weights. So let's run through those real quick. Communications is sitting at 9.55% of the portfolio. Consumer discretionary is sitting at 8.3, consumer staples at 5.44, energy is sitting at 8.17, financial is sitting at 16.03, healthcare is sitting at 8.02, industrials 4.35, technology 12.89, materials is sitting at 13.21, utilities, no utilities in the portfolio, REITs and real estate sitting at 14.02, and no ETFs. You can also see I added this section over here. This is also the sector weights, but just a different view of it. This is how much, not only percentage-wise, that'll match up to these percentages here, this column, but also how much I have funds-wise, right? So $11,208.49 sits in communications, $9,785.24 in consumer discretionary, $6,391 in consumer staples, $9,588. So this is the breakdown of the total portfolio, $117,415.72, and how they're broken up in the sector. So if you're interested in that, go ahead and pause the video and you can run through that yourself. Now, as I stated, I did add this slide as well. This is all the positions in my portfolio, at least the dividend growth portfolio that I have and I share on this channel. How many shares I have, the current price, so as of close of business on Friday, which is when I update this, the current market value, so current market value is just the total shares times the current price, my average share price, right? So that would just be the total shares divided by my purchase price. This is what I purchased them at, right? So that's my average cost basis for those. So as you'll see here, the current price of Ally is $32.54, but my cost basis is $26.38. So if I'm buying when it's above my cost basis, it will raise my cost basis. What I'm looking to do is, you see these in the red, I typically like to buy when they are below my cost basis, right? So Bank of America is currently sitting below my cost basis. So if I was to buy Bank of America, it would decrease my cost basis. That is what I'm looking to do. I'm not saying I never buy whenever they're over and increase my cost basis, but I do have a point where I get to where I feel they're out of fair value and I stop buying them. Now, I don't necessarily buy just because they are out of what I consider fair value. I will buy them MPW, like I mentioned. I would like it back here in the $10 range. My cost basis is $10.75, but it's $12.08. So I'll buy it in the $12 range, but I won't let my cost basis go above $11, right? That's where I'm comfortable with my cost basis being. Hopefully I can get it back down here in the $10 range, but if I get to 11, I'll stop. That's what I consider as fair value, and I won't let my cost basis go above fair value unless it's because the dividends paid out. Whenever the dividends paid out, they're going to buy whatever the market is, and I don't have any control of that. But let's continue to run through this. Average share price, right? So that's my cost basis. Purchase price, that's what I have in the position. That's the purchase price times the total shares. Total return, whether I'm up or down, you'll see that clearly here, right? I have 1, 2, 3, 4, 5, 6, 7, 8, 9 positions that are in the red, and the rest are in the green. What sector they're in, what their dividend payout is, and when they pay out. So whether they're quarterly, monthly, semi-annual. I have one monthly payer, ticker O, Realty Income, a couple of semi-annuals. Those are both mining companies, SBSW, Sylvania-Stillwater, and Vale are both mining companies that pay out semi-annually, and most of them are quarterly payers. And then here is, you'll still get to see my yield. Here is my current yield, right? And here is the yield on cost. Portfolio weighting, how much of the portfolio is allocated to Ally, sector weightings that we saw on the breakdown by sector. Now you can see it by each position, right? So there's a little bit more information here. Estimated annual income is just the shares times the dividend multiplied by the dividend. That'll give you my estimated annual dividend. The payout months, what months they pay out, and the dividend growth. Now, this one, I'll be honest, I don't update as much, but I do go in and look at these from time to time and see how their dividends growth. And what I'm looking for is dividend growth. You'll notice a couple of them here are in the 0 range. There's a 0, there's a 0, there's a 0. Now, most of these, if you also look at Kraft Heinz, this one I'm a little bit disappointed on. No raise, but I'm hoping that they do continue to raise. This one here is Sylvania-Stillwater. I think they recently had a cut, actually, but this is a mining company and they fluctuate. So some of these are not typical, so I'll update this whenever I see the next payout, and it may not be exactly the same. Same thing with Vale, semi-annually. They are not consistent. Sometimes they'll be above this, sometimes they'll be below that. It's really based on how they're doing as a company. So keep that in mind if you're looking at stocks like that. That's why the majority of mine are quarterly dividend payers. A little tongue-tied today, sorry. I did spend most of the morning at a hockey game with the kids, so we were screaming and yelling a bit this morning. But anyways, that's why I like to keep most of my positions in pretty steady Eddie quarterly payers that typically raise their dividends over time. That's what I'm looking for. And if it is a 0, like this one where there's not much growth or slow growth, I'm looking for higher dividend yields like this one, right? This is a 8% current yield and a 10% yield on cost. So I don't mind it. I look at those ones that aren't growing. Even this one, right, for Verizon, it's a 6.53% current yield, and my yield on cost is 5.757%. I don't mind slower growth if the yield is higher, right? I'll take that and I'll look at it as similar to a CD where it doesn't have as much growth, but I'm getting a nice yield or yield on cost. So I wanted to add that so you could see it. Like you can still see, here's my total here. $117,415.72 is what the current portfolio is worth. $115,718.88 is what I have into the position. I'm up $1,696.84, a 1.47% return. My current yield is 5.051%, and my yield on cost is 5.126. Estimated annual income sitting at $5,931.19. So I think this gives you guys actually a little bit more information on my portfolio, not less. So that was why I was comfortable making this change. Let me know in the comments down below if you like the change in the format or if you prefer the way I was doing it before. And that is it for this one. How did your portfolio do this week? Did you have any companies in your portfolio that paid out dividends? Let me know down in the comments section below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join me on this journey to financial freedom. Don't forget that Webull link down below for those of you who might not have a brokerage already. Again, if you use that, it's a great way to help out the channel. You'll get some free stocks. I'll get some free stocks. Go ahead and open up a brokerage account, put some money in there, and start investing and start your journey to financial freedom. You don't have to be a financial guru or have a degree in it. I do not. I grew up in a double wide trailer. I'm not the smartest guy in the room. I'm sure some of you out there are far smarter than I am. So definitely share, excuse me, share with us your experience as well in the comment section down below so we can all learn from each other and build a community here of like-minded investors. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticisms. If there's things you don't like, go ahead and put those down below as well. We'll see what we can do to make the changes. Obviously, the channel grows if more people watch, enjoy, and like the comment or like the videos. So I do want to try to cater to what you guys want to see. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you're having a great weekend, and we will see you on Monday back for the Stock Pick of the Day series. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and temporary purposes. Investing involves risk. You can't lose money and should never invest any amount you're not comfortable losing. Always do your own research and invest based on your situation and select the criteria or seek the advice counsel of a certified financial advisor. Don't just follow me. I'm just a guy on YouTube, right? I'm not a financial advisor. I'm not a guru. And if you have questions, find a actual professional and ask them, especially around taxes. Don't watch YouTube videos for tax advice. Go talk to your tax advisor. All right, I'll get off my soapbox. You guys have a great weekend. Thanks for stopping by.